Hello, everybody. Welcome to the show. I am Gary Palmer Jr., you're you, and together we are minting coins. We are minting coins, we are minting tokens, we are learning about Bitcoin and blockchain technology, and there's a lot to go over. There's a lot to do, and it is keeping us busy. I hope it's keeping you busy, and if it's not, what are you doing? What are you getting involved in? Why are you not exploring more, learning more, creating more, consuming more? Because we are just so excited. We think you're excited, and a lot of other people in this space are also excited about what is happening, about the technology that is being developed, about the systems that are being created, about the industries that are being disrupted, about the potentials that are being unlocked and released for people all around the world. And you are one of those early people. You are one of those early adopters. And thanks for spending some of that early time with us learning about what is happening in the space. So looking at the space and taking a peek at what's going on, taking a start over at CoinMarketCap, we're looking at the market. We've been paying very close attention to how the markets have been increasing and decreasing as we've been doing what we're doing in the space. So right now we're at a total market cap of $212 billion, $0.2 trillion total market cap in the cryptocurrency space. And that's a 24-hour trading volume of $13 billion. Major dominance, over 52% of that $212 billion is in Bitcoin. And when we scroll down and we take a peek at some of the top coins on coinmarketcap.com, we also look at livecoinwatch.com. We love that website as well. We have a per Bitcoin price currently hovering around $6,400. And we're looking at this $6,400 price, and it's been $6,000 for about a year. It has gone up, it has gone down. People are in the space, people are out of the space. Even more people are done with the space because the price isn't moving, nothing's happening. And a lot of people are losing hope because their hope is based on the price. Their hope is based on the speculation. Their hope is based on misplaced sort of priorities of where the interesting things in the space are happening. And where the interesting things are in the development, the teams, the integrations, and the synergies that are really happening across different industries, different projects in this space. So we're looking at the Bitcoin price right now, the speculative price right now, what people are willing to pay for one whole Bitcoin right now at about $6,000, $6,500. But you know what they say is that with a new technology that's being developed, with the Lightning Network that's being developed, with all of the lightning fast transactions that are happening, with the new capabilities that are starting to turn on with Bitcoin in terms of the smart contract capability, in terms of the speed of transactions, of the anonymous ability, and also the affordability of these transactions, of these processing transactions, not just in terms of money, but in relaying information. There's a lot going on. And if these connections increase with Metcalfe's law, if more and more people are actually using Bitcoin, if more and more people are actually using Ethereum, as well as speculating and holding on to the tokens and having just a piece of these really rare, scarce assets, we could see these prices go through the roof. And so real quick, if we bust out our handy dandy calculator and come over here and do some quick math, and let's think about what it would take if the total market cap of Bitcoin went from where it is now, and where is it now, of 111 billion. If we 10x this total market cap of 111 billion, and let's say we go to $1 trillion, so we divide this 1 trillion by 20 million Bitcoin. That would give us about $50,000 per Bitcoin. So we can really see a $50,000 Bitcoin if we simply see a 10x which I know is a huge amount of money, but if we see a 10x in the Bitcoin price go from $100 billion to about $1 trillion, we can see the 6,000 Bitcoin price go from $6,000 to $50,000 or $60,000. And this is in line with what we're hearing from, reiterations and reinforcements of the predictions coming from Tim Draper and other venture capitalists who are predicting that we are going to see a $250,000 price target for Bitcoin sooner than later. And this is just more and more people are double downing on what their predictions are and what their increases are for Bitcoin as they see that. And the reason that they're sticking with those projections is when we look at the total amount of Bitcoin out there and we look at the top richest Bitcoin addresses out there, we know there's 300 million people in America, about 300 million, 350 million people in America. There's only 5 million Bitcoin addresses that have more than $100. And let's say 2 of these are mine, right? And there's 5 million of them in the world that have more than $100. So that's far more than a number of people in America, far more than a number of people who even live in New York City. That's more than you can possibly believe. It's really a small amount of people. And so as this technology increases, as more and more of the institutional investors and the institutions and the institutional money gets involved into the cryptocurrency space, into these really rare assets, anyone that's involved now can really expect to see the price of these assets increase, especially as, fiat money is inflationary, and we're expecting the value of that fiat money to go down even more, as the government is probably going to have to print a ton of more dollars, more fiat, more US dollars to pay for the ever increasing debt that the United States government has. So as these institutions get into Bitcoin, as these institutions are dumping their money into Bitcoin, as we have limited assets available, of whole Bitcoins available inside the market, we could easily see that price of Bitcoin double. And this is not even taking into consideration yet that we have the next halving coming up in just a year and a half, about 18 months away, about May 23rd, 2020, year and a half away. We have the next halving coming. We're about halfway through, more than halfway through. Right now, we have about 12.5 new Bitcoin being created every 10 minutes. In 18 months, it's going to be 6.25 new Bitcoin created every 10 minutes. The supply of new Bitcoin is going to be decreasing. The inflation of Bitcoin is going to be decreasing. And the number of people in the world, the number of institutions, the number of governments, the number of organizations, the number of, even robots and smart contracts that are going to be wanting their own amount of Bitcoin is going to be increasing. The number of users on the network are going to be increasing, and the supply is going to be shrinking. And this is in the face of more and more of these dollars being printed. And so when Tim Draper says that we can expect to see a $250,000 Bitcoin, I mean, we're talking not just $1 trillion for that total market cap of Bitcoin, but to reach that $250,000 per Bitcoin, we'd have to see the total market cap of Bitcoin go to $5 trillion, or at least $4.5 trillion. So with $4.5 trillion going into Bitcoin, that's a huge amount of money. That's 5xing, 10xing, 50xing where we're at now. And so then when we move into the news and we see what's happening and what's being talked about today, we see that the CFTC chairman is talking about distributed ledger technology, otherwise known as blockchain technology, and how this blockchain technology can be used to automate regulation, how this blockchain technology can be used to replace a lot of the intermediaries and the third parties, and it's going to save a lot of money, it's going to save a lot of time, it's going to increase a lot of efficiency. And this blockchain technology can really help all of these things, can help the government, can help the regulators, can help the CFTC. And they're talking about actually using blockchain technology inside their institutions, not just in terms of the assets, not just in terms of the speculation, not just in terms of the scarcity of the asset itself, but they're talking about using the associated technologies to make this happen. And so they've been saying a lot of bad things about Bitcoin, a lot of bad things about the assets, a lot of, let's say, not good things about all of the technology necessarily. But now we see that the CFTC is going in a positive direction, not just for the assets, but also technology. We see Singapore Central Bank and Stock Exchange settling tokenized assets on the blockchain. This is coming on the heels of what happened out of New York City last month when they tokenized that whole building, or they're tokenizing actual real estate in New York City. And those are just the business people and the real estate investors. But now we have central banks out of Singapore and stock exchanges that are tokenizing assets, that are settling assets with blockchain technology, that are understanding exactly how they operate, exactly what the processes, the procedures are involved for the people that they have in their buildings and their organizations connected to the associated organizations on the other ends, sending and receiving these digital assets. They're setting up these systems, and they're going to share these best practices with other central banks because they're going to be a part of this technology. They're going to be a part of this next wave. They're going to be a part of the benefits that this is going to be bringing the financial industry in the short term, in the medium term, and you best believe in the long term. They're taking the concept of these tokenizations, of tokenizing assets. They're taking the learnings from this project, from other projects. They're patenting processes, they're patenting technology, and they're applying this not just to the broad spectrum of the economy, as they say right here, but they're creating a whole world of opportunities beyond just the economy, spanning across the automotive industry, the energy industry, the agricultural industry, all aspects of supply chain. And they're creating systems that are going to work across these governments, these regulators, these banking institutions. And what we see in the case of Ripple is that we see Ripple working with the federal government. We have heard about these meetings that executives at Ripple are having with executive leadership of the United States White House, of the executive branch of government, of the Trump administration. We know that Ripple's talking with them. We know that Ripple is playing the long game. We know that Ripple is putting up offices, as are a lot of other exchanges, such as Coinbase, around the world. And here we see Ripple bumping securities lawsuits to federal court instead of creating scattered decisions across lower courts, really bumping these issues up to a higher court where they can be having the greater attention, magnified attention from people who are at a higher level of government, levels of government where they can make decisions across all states, not just certain jurisdictions, not just certain areas of the country, but making rules and making, more importantly, precedents of small issues, which can be gathered up and built up to use in other court cases down the line, for greater issues. And they can create these precedents. They can help craft these decisions, through their lawyers and through the eyes of the judicial system. And they're, making the ways for Ripple to be a centralized contender to the private, or not the private, but the public open blockchain technology that Bitcoin is providing. And this is all happening in unison. What we see with the regulators talking about distributed ledger technology for automating regulations, what we see from foreign central banks and stock exchanges settling tokenized assets across the blockchain, what we see from cryptocurrency projects, centralized or not, working with governments and regulators around the world. And at the same time that all this is happening, as being said from the Binance CEO, the trading volume of what's happening in crypto is at least 2x larger than the reported statistics. That the amount of people who are buying and selling, and mostly buying, Bitcoin and cryptocurrencies over the past year is really happening over over the counter, or behind the scenes. It's not happening in a way that you can see it. It's not happening in a way where we can view it over here in CoinMarketCap. You know, because when we see this volume over here, we see the Bitcoin price, 6,300. We see the total market capitalization at 111 billion. We see the total volume, $4 billion. But the actual volume of Bitcoin, according to what we're seeing from Binance over here, would be closer to $8 billion a day, if not more. Because what's happening is that these are huge sums of money. These are huge amounts of money. And, you know, for someone to take even $5 million or $50 million or, you know, $1 billion and to purchase a huge amount of Bitcoin, you know, you can't just go to the market and do that. You know, not without, you know, being extremely noticeable, not just in a well-regulated marketplace, but especially inside a blockchain marketplace. It would be very, very noticeable. And so a lot of these transactions you're not seeing, a lot of these transactions you're not noticing. Maybe sometimes if you're watching the whale bot on Twitter, or if you have some sort of script running, you know, maybe you're seeing some of these transactions that are flying through on the open blockchain. But what's happening is just way bigger than anyone understands. There's way more going on than even people in the space are fully comprehending, simply because there is so much happening in a space. There's so much development of technology. There's so much development of projects. There is so much collaboration across teams happening in a space that it is just impossible to be paying attention to all of these different updates, all of these different factors. And in the meantime that, you know, the traders are getting really, you know, frustrated that the market is not volatile enough, that there's not enough movement with what's happening inside the marketplace right now, is a lot of other people are getting frustrated that they're not seeing, you know, developments in the space. What we have is that a lot of other money, bigger corporations, bigger players are making moves. And when we hear about it, when we hear about such as, you know, BAT token getting added to Coinbase, or 0x or Cardano or Zcash or Stellar, or any of these being added to Coinbase, and we see these prices pop, there are moves that are happening behind the scenes that we just are not aware of. And when these moves happen, and then you feel like you're missing out, and you're putting in your money after the fact, and then the price is just going to fall after that, that's a losing strategy, to be trying to chase, you know, those dragons, to be chasing those headlines, to be buying in at the highs is not what you want to do. I mean, I would recommend that you learn about this technology, that you learn about this industry, that you pay attention to what's happening in this space, and you make your bets, you make your positions before someone tells you what to do, that you do your own research, that you make your own decisions, and that you understand why you're making the decisions that you're making, and that you're not just haphazardly jumping in or out of the space, that if you're making a short-term decision, that you know you're making a short-term decision. If you're making a long-term decision, you know you're making a long-term decision. Even if that's going to be, you know, diversifying across all the cryptocurrencies, or maybe you're going to put all your money on, you know, just one coin. You gotta make your own decisions. You have to understand what are these decisions. And simply what I'm saying is, don't make your decisions based off the headlines. Don't make your decisions based off what other people say. Don't make your decisions based off of what I say. And then to understand that when things start to happen, when the space starts to blow up, and it will, and I don't know if it's going to be 2 days away, or if it's going to be 2 months away, or if it's going to be, you know, 9 months away. But when it happens, it's going to happen. It's going to be intense. People are going to freak out. I mean, for me to think it's going to happen, the price of Bitcoin would have to jump 10%, 5 to 10% in a day, and then another 5 to 10% a second day in a row, and then another 5 to 10% a third day in a row. If it jumps, 5 to 10% like that, or 10% across that 2 or 3 days, then that's going to be the sign that things might be heating up, that things might be happening. And when they start happening and we see these different projects start to pop like popcorn, things are going to get hot. Things are going to pop up in the sky and then they're going to fall all the way back down. Some things are going to bounce. Some things are going to just crack when they hit the ground. And the one thing that I'm looking for, the one thing that I'm looking to, the one thing that's guiding me most is really understanding the predictability and the long-term, certainty of what's going to be happening with the total supply of Bitcoin, what's going to be happening with the inflation of Bitcoin, what's going to be happening with, the monetary policy surrounding Bitcoin. Because I know who to go to see what decisions are going to be made, and it's the network. There's no one person, there's no one company, there's no one country, there's no one anything that is making the decisions for Bitcoin versus all these other tokens where, they can definitely go up more in market cap, and we could definitely have some black swan events, right? It's like it can go up, down, or it could stay the same. But it's going to be a wild ride. It's going to be super, super exciting. We're looking forward to it. We've been super busy doing what it is that we're doing behind the scenes with minting coins and minting systems and the different minting of tokens and processes and just understandings that we're putting together. If you want to know more, then reach out. We'll share it with you, but we're not ready to share anything super publicly yet. Just know that we are working behind the scenes. We are developing behind the scenes. We are making things, if not for mass usage, at least for understanding and for fun. And that's where the majority of our focus is just understanding this technology, sharing this information with other people, really, categorizing and defining a lot of these, practices and pieces of information that people are going to need to put it all together in this world moving forward. It's amazing to think how much of a disadvantage you would be if you didn't have a computer or a cell phone, if you didn't have the internet to be watching YouTube or videos or social media to reach out to people, or to get information from Reddit, or to share information, or to be inspired with this technology that we have with Web 1.0 and Web 2.0. We can't imagine what this future is going to be like for people who don't have the connection to blockchain, that don't have access to the same level of blockchain systems and blockchain understanding. It's just going to put people at a huge disadvantage. And so we are really proud to be curating information now, to be sharing information now. And we're really excited that you share this information with us. Thanks for watching this video with us. Thanks for sticking around. Thank you for liking and subscribing, hitting that bell icon notification. We really do this with your support. And if you have any questions or comments, leave those in the comments box below. And until next time, I'm glad that together we are minting coins.